Hello everyone and welcome to our show Market Wizards. Today I have with me a trader from Chennai, someone who started off working in the IT field, moved to trading and now has created bots who do trading for him. None other than Kiru Bakaran. Kiru, welcome to the show.
Hey, thanks Ramesh. Thank you so much for having me in this session. I'm glad to share whatever the insights that I have. I'm glad to share in this session.
Sure, I'm looking forward to two things, Kiru. One is learning about your trading journey and your trading life. And the second, which is the most important, learn a strategy from you. Okay. Let's start about your trading life. Kiru, you said, we were having a chat and you said you were doing a job for 10 years. Post that, you decided to get into trading full time. Tell me about this transition.
Hey, hi. My name is Kribakaran Rajendran. I'm the founder of algo trading firm squareofbots.com. And I've been trading since the year 2008. And from 2008 to 2014, almost for 6 years, I've been trading completely based on news-based trading where I did not have any specific rules. So only from 2014, I started my algo trading journey. And by 2017, I quit my job where I was working for almost 10 years in IT field. And once I quit my job, I started focusing full time with respect to my trading, as well as I started a firm called SquareOff, where we provide automated trading bots to the users, which has inbuilt strategies. This started in the year 2007, I guess, when I was final year of my college, where usually when I started trading, this is not even before I started trading, it's almost like I was doing my final year of my college. Every day, my college starts around 8 o'clock, so I go to the bus stand around 7:30. So I wait for the bus. There is this tea shop in front of the bus stand, and this tea shop they sell all these newspapers, and next to the tea shop there is some old lady who sells flowers. So every day I used to observe there is this one Honda City who comes exactly at 7:30, and the driver used to get down from the car and he goes and buys the Economic Times newspaper, and then also he goes to this old lady and buys some flour and goes to the car, and he gives this Economic Times paper to this the owner who travels at the back seat, and then he keeps that flowers in the dashboard and they move on. So after a certain point of time, this has been a regular routine. At one fine day it did not come, but then I thought, okay, I did not even know, I did not meet that guy, I did not know what kind of business that guy is into, but my mind said that this guy is buying Economic Times, probably is a trader, and he's doing really well. So even that guy was really looking good also. So all these things subconsciously was there in my mind. So one fine day I directly went to this newspaper stall and got this Economic Times newspaper. I did not know back then any terms related to investing or trading. I just bought the newspaper. I thought anyways it's going to take 30 minutes of travel to my college. So just let me read this newspaper. Indian stock market was in a very boom period between 2004 to 2008 January. So whatever the stocks that you buy, it tends to move up. So I used to observe TCS share, last week I checked it at 1,000 rupees, now it is 1,300 rupees, almost 30% increase in share price. So for every single stock, there was an increase in share price. So then I thought probably this guy is super rich, maybe because he is investing regularly in the markets, and this could be a trigger point which came into my mind. Then from that day onwards, I started putting more effort. Whatever the terms that I did not understand, I'll just note it down. And also there was some community in Indian stock market community in Orkut. So back then there was no Facebook also. So I started interacting with other traders, slowly started gaining all this information in trading. And by 2008 January, I applied for a PAN card account and opened an account with some other broker and directly started trading. With respect to current environment, many people are getting into analysis paralysis, where they keep analyzing, but they fail to take the trade. They'll always wait for that one golden opportunity. But the best thing that I did back then was there was no enough resources. So I thought, let me directly get into action, start trading by myself and get whatever the mistakes that I could do. I thought I could do with whatever the minimal capital I have back then. So that really helped me. And from then onwards, my trading started, my whole trading journey started. I was working at Infosys and I was trading. So any person who is managing their day job as well as trading, the difficult part is, say you would have taken a trade and you would be busy with the meeting. And then by the time you're done with the meeting, you will realize that the stop loss is hit or the stop loss is skipped, and you tend to make higher losses. So it was difficult to manage both trading and as well as my day job. So that is when I thought probably I should move to algo based trading. And the first and foremost criteria for me to get into algo trading is you should have rules. Like it should tell you clearly when to buy, when to sell, and how much quantity to buy, and all these things has to be there. only then you would be able to get into algo trading.
The one thing that I like from the story is the fact that you went to college. There are like for me, I got admission in one of the best colleges in Bombay to do commerce, but we didn't have to go to college because college said, please do whatever you want, come for exams and ensure you pass. So that's how I entered the stock market. I had all the time to myself, and I was reading the Economic Times just the way you said, and I was seeing stocks going up all the time, and I started trading on my grandfather's account then in 2007 because I was a minor and I couldn't have my own account then. And I thought I was, Rakesh Junjunwala already. In 2007, whatever stocks I was buying, those stocks were going up the next day.
Exactly, because that was the phenomenal bull run between 2004 to 2008 January. If anyone invested in any of the stocks, it would have gone up significantly.
And for us, for me, how simple I felt trading was, you could pick up any stock from A to Z, maximum 3 days of holding time, and next day would sell it at a higher cost. And that's how I learned trading when I entered the stock market until 2008 happened. And back then leverage was also very open. Right. Brokers used to give you, I got very good leverage, as someone who was a minor still trying to dabble with trading, I got a leverage of 10x, 20x very simply from my broker.
Even I remember paying almost 100 rupees per lot trading options. Like back then these brokers charge a ton. Like how do you manage the brokerage back then?
In my case, the broker was very well known to me. Okay, so the brokerage was very low, but I burnt out my capital very, very soon. In 2008, when the fall came, it took me a week's time to lose everything. Okay. And it took me about 3 months to become, to get about 25%. And I was already counting my stars. I was saying 25% in 3 months, how much per annum? I was telling my father, you're doing something wrong and stuff like that. Tell me, have you ever blown your account?
Yes, definitely. So there is without blowing your account, you won't understand the importance of risk management. No matter what kind of experts come to you and say that give importance to risk management, money management, we will not listen to it unless and until you blow up your account and learn by yourself. So this happened in 2014 at the start of my rule-based trading, I guess. I was getting into options. I thought like if you instead of trying to justify or instead of trying to identify a trend, if I could just buy a call option and buy a put option just before the results is announced, I thought once the results is announced, the market has to go up or go down in one-sided direction. So I thought that is a very good way to make money, and I tried doing that with some couple of stocks, and it did give decent returns. So the problem with respect to trading is, if it is giving you back-to-back losses, it's not a problem. When it is giving you back-to-back profits, that increases your confidence. You become overconfident with, suddenly you tend to think that you crack the markets. That is the exact thing that happened by doing this specific strategy. Back then, I did not even know that this is a long strangle strategy. I'm just buying an out of the money call option, buying out of the money put option just before a result is announced, so that when the results is announced, either call is going to go to 0 or put is going to 0, but one strike will give you 2x, 3x or 4x or even 10x. So I was working with Infosys, so I started buying Infosys. I thought just interacting with the team leader will give me the insights of the share price movement. I asked him, is Infosys really good? Tomorrow the results is going to come. He said, all good, all the projects are renewed, Infosys is going to do super good. So over the period I accumulated call option and put option before the events. By the time of 3 or 320, I realized that I accumulated almost 1.5 lakhs worth of put options and call option. And back then my salary is only 25,000. But whatever the savings I had, everything I put, and almost my 6 months of my investment is at stake now. But I still have the confidence that tomorrow market is going to go up or down in one-sided direction. And then eventually what happened was, the whole night I couldn't sleep. I was just checking every single news, how the Nasdaq is going to do, how the US market is going to do. The next day, Infosys usually announces the results before the market opens. That is what they follow. So by 8:30 the results was out. The result states that Infosys meets no analyst expectation. So I thought, okay, then it means that it is not really doing bad. It is really going to go up. So my put option might go to 0, but call option will double or triple. So I started thinking, okay, 1.5 lakhs. If it triples, it's 4.5 lakhs. So okay, no EMIs. I'll buy that. So I was doing all the calculations. Yeah,
you're thinking to yourself, I came to office by the bus and I will go back by the car.
I started expecting too much, and the market opened at 9:15. And the moment it opened, both my call option and put option decayed. And my 1.5 lakhs opened around some 40,000 something. gone. And then by the day end, I thought it's going to recover. No way it's going to recover because post-event IV crush happens. But back then I did not know all this. Post-event, by 3 o'clock when the market closed, the overall value was only 20,000. So invested 1.5 lakhs, ended up with only 20,000. And the whole night I couldn't sleep. I was now whom should I put the blame? It's all about my own mistake, right? So then onwards, I took a strong, firm decision that unless and until I learn more about options, I'm not going to take any options trade at all. So that was the complete the complete trading blowing up incident happened. So that gave a huge conviction to give too much importance to risk management and everything. So that is why I'd say if you're blown up the account, do not worry about it. That is the actual first stage to get started into successful trading.
Yeah, and I agree. I mean, I blew up my account 2008. And once after that also, again, risk management, Kiru, let me ask you about this. Risk management, we talk a lot about managing your money, how much money should you put to one trade, and I'll ask you this question. You've been a trader for a longest time, people start off with one lot and as we gain confidence, happened with me also. I just multiply my lots, right? Once I know my strategy is working, once I know I'm being able to understand or tell where markets are going, I start getting more confident, multiplying my lots. And eventually what happens is, once you scale, the first few trades will go in your favor. That one trade where you've bet more money than what you should have is the trade that definitely goes wrong and you're back to square one. I want to ask you this. How important is it to manage your money in terms of the number of lots that you trade, or anything that you can tell us or our viewers about what is the psychology behind increasing stakes within a trade?
Right, got it. See, basically, when you are trying to scale up your capital, as long as you are not trading with one lot, two lots, you would really do well. You will not be bothered about it because that one lot is not going to pinch you anyway. But the moment you see back-to-back profits for 3 months or 4 months and you see, okay, you are making reasonable profits, it tend to give you confidence. And then you tend to think, okay, the strategy is really doing well in the back test. Even in the live results for the last 3-4 months, it's really doing well. Then you tend to move from 2 lots to 20 lots or 25 lots. You increase it 10 times or 20 times exponentially and start trading it because you have the proof in your hand that you have made money. But I'll tell you what the problem is. So now I'll try to explain with a story. So this is a story of a person called Milo. So Milo is a person from ancient Greek time where he is actually a world champion wrestler. So this guy is, even though he's a world champion wrestler, the kind of way that he trains himself is totally different from any other existing championship. So all the people who wanted to know the secret behind this guy, even though this guy is a world championship wrestler and won back-to-back multiple championship, how could this guy win such championship consistently? So then what happened was, there was a specific match that was been announced between Milo and this competitor. They said that, okay, there is going to be a wrestling match that is going to be announced. So now people are curious to know how these two guys are going to compete with each other, how they are going to train to get to win the championship. So this competitor, what he does is, okay, there is this existing champion, I have to beat him, so I have to train more hard than him. So it will let me go and buy a big bull so that I could try to lift it and train hard so that when the championship happens, I would be easily able to beat him. So everybody looking at that guy applauded him, stating that yeah, this is the right way to beat a championship, because once you could lift the bull and train hard, you could easily win. So now they are more curious to see what this champion guy, existing champion, will do. So now what this existing guy, the Milo guy, what he did was, he went to the market and bought a small calf. So everybody was like, okay, why should this guy buy a small calf? Because anybody could lift that, you could lift, I could lift, anybody could lift it. You can't grow your muscle, or you can't become a champion by lifting a calf. But one thing what he did differently was, after buying this calf, he started lifting and carrying that calf in his shoulder wherever he goes. If he goes to a market, he will carry that calf. If he goes to some other place or playground, he carries that calf. Wherever he goes, every single day, he'll carry that calf. So over the period, he was so used to that weight of that calf, so that he did not even realize that the calf is growing. So over the period, the calf has grown eventually into a big bull, and still he was able to carry that effortlessly because he was used to that weight every single day. So at the time of championship, Milo, he was able to lift it effortlessly because he was so used to the calf weight over the period of time. So this is exactly what happens when you try to scale up the capital. So as long as you're trying to trade with two lots or 3 lots, you would be easily able to do it. But the moment you're moving from 3 lots to 30 lots, what happens is, even though your trading strategy is really right, you are not used to the fluctuations of MTM. So when you're trading with 3 lots, maybe you will be getting used to an overall MTM of minus 5,000 to plus 5,000. But suddenly when you're moving to 10 times of higher lot size, the fluctuation will move 10 times, right? So from minus 5,000, it could increase to minus 50,000 to plus 50,000. So what you'll think is, okay, my 1 month of salary is fluctuating in one trade. So you will not be able to stick to it. Eventually, we'll lose faith in the trading system and we'll not able to become a disciplined trader. So that is going to definitely affect any kind of trader. So when you're trying to scale up your capital, scale up gradually, slowly, gradually from 3 lots to 5, 5 to 7, 7 to 10, and then go to your final lots of 30 lots. That way you would be able to scale up your capital the right way.
Yeah, I think that makes sense, because a sudden scale up, like you said, you'll not be able to digest the M2Ms, probably get kicked out, or maybe lose a high percent of your capital within a trade, right? Having said that, I'm excited to hear about the strategy you're going to share today. It's not Nifty this time we're discussing, not Bank Nifty, but Fin Nifty. Right. So, can you tell us what are the rules? What is it that one needs to follow when you're dealing with a strategy got to do with Fin Nifty, which is a relatively new index that we're trading? And how should one go about building their stop losses and targets in this?
Yeah, sure. See, with respect to Fin Nifty, I'll tell you the idea of developing a strategy for Fin Nifty, how it varies with respect to Bank Nifty or Nifty. So as you rightly said, Fin Nifty is relatively a newer index, and the kind of movement that happens with respect to Fin Nifty, specifically on expiry days, it is relatively very lesser. It has an overall range. If I calculate what is open to high and open to low, and overall high minus low and open to close, if I calculate all these ranges specific to Fin Nifty on expiry days, it shows that most of the time Fin Nifty trades between minus 1% to plus 1% during expiry days. So which denotes that there is a possibility of lesser trending moves on expiry days, where if I have two options here. So what I could do is, there is a strategy where you short at the money call option and at the money put option on expiry days, where the overall stop loss, what you have to do is, instead of using a stop loss on a premium, use stop loss on the underlying, where only when Fin Nifty moves plus 1% or minus 1% on the either side, on the upside or on the downside. Consider if Fin Nifty is at 20,000 levels, 1% is 200 points. Yes. So if Fin Nifty moves from 20,000 to 20,200 or 19,800, 200 points on the upside or on the downside, then you close the straddle with a loss and you come out. Otherwise, what happens is, as long as market moves in zigzag, since we are not using a stop loss on premium, it is not going to hit your stop loss. And as long as it deviates between these ranges, your ATM will tend to decay, and eventually you get to make the profits. So when I tested this strategy, it has given almost some 36% returns in the last 8 months to 10 months, I guess, from October to till date. So one thing to keep in this specific rules is, your entry is at 916 and the exit is at 330. So if you apply this strategy on all days, it still gives you returns of 62,000 rupees per lot, but the overall drawdown is around 7,500 rupees. But if instead of trading on all days, if you trade only on expiry days, the returns from 60,000 can come down to 45,000, but your drawdown will also reduce from 7,000 to 4,000. So overall, it gives you good risk-adjusted returns. In addition to that, what you can do is, since the overall expected range is between minus 1% to plus 1%, you can take short strangle as well, where you can short 200 points away call option and 200 points away put option. But the premiums is very, very minimal on expiry days when you try to short 200 points away call option or put option. Okay. Instead, what you can do is, you short at the money call option, put option. Instead, take these 200 points away as a hedge, so that your overall risk is protected no matter where the market moves. Your overall risk is totally capped, and also you tend to trade higher number of lots, where if you are trading without hedge, you used to spend 1.2 lakhs per lot, but now you can trade only with 45,000 or 46,000, you can easily trade one lot, where considering that from 30 or 35% returns, it can increase to higher percentage when you are using it as a hedge.
So Kiru, thanks for sharing the strategy, very interesting data. And for our viewers, we'll share this data so that they understand what backtest we've done and how Fin Nifty has worked out, from October 2022 when it started off. And today, if you trade it with every day putting one trade, what is the profit and loss looking like? And if you do it only on Tuesdays, which is the expiry, how does it look? Very interesting, Kiru. Sometimes I think over analyzing a strategy is actually paralyzing yourself, right? It's as simple as that. You've noticed what is the maximum or the minimum that move that you get, like on the downside and the upside. And within that, if you could do a writing strategy, I mean, nothing as simple as that.
So let's summarize the rules of the strategy that Kiru just explained. The first rule, you short a at-the-money call and put at 9:16 in the morning on expiry day and cover it at the end of the day by 3:30. You run this only on FinNifty expiry days. And against the two options that you sold, you buy a 500-point call and put OTM for margin benefits. Use a 1% stop loss on the underlying, and if the stop loss gets hit, you exit both your legs together. We have backtested this strategy to give you some inputs. So basically, your estimated margin in this strategy is somewhere around 54,000. The overall profit in the strategy is about 52,000. Your average daily profit is about 1,200. Your max profit is 6,900. Your max loss for the predefined period is 4,400. Your winning days are 72%. Your loss days are 28%. If you see, your average profit on win days is about 2,300. It's almost 4%. And your average loss on loss days is about 1,700, which is about 3%. Your max drawdown is about 5,300, which is about 10%. Your max winning streak is for 9 continuous expiries, and your max losing streak is for 2 expiries. The expectancy of the strategy is 0.7. Hence, as of now, as of yet, as we are talking, this strategy is still fruitful and making money in the markets. Now, let me actually go out and show you what are the monthly returns. In 2022 October, when the FinNifty expiry started, October, November and December, if we calculated, October was a loss-making month, whereas November and December has made money. So total, if you do only one lot, you would have made about 10,700 in 2022 in the 3 months. In 2023, we've backtested this entirely till the month of August and only in the first week of September. This strategy is done well. It's been profitable in all the months besides June. So if you see, a net total would have been 42,000 until the first week of September, which is almost 77% ROI. And on total, if you see on total from October to September, basically almost a year of backtesting, the total return on the strategy is 97%. And obviously, you'll have to calculate your slippages and costs when you actually account for your real returns. And here's your PNL on all the expiries. So this is how your profit and loss looks. As you can see, there are more green bars as compared to red bars, which means the strategy is definitely profitable. And here's your max drawdown chart. So this is how your max drawdown graph looks. In some of the expiries, yes, we are getting some drawdowns. We've already mentioned at the start, where we are seeing the drawdowns. But yeah, we are getting some drawdowns. Overall, the equity curve seems to be in the profitable state.
Kiru, and you also explained that if you would buy out of the money options beyond which if market goes, you are still safeguarded. Let's assume, there is a trader who does not want to do this, who's open to kind of take risk. How should he do it? How can you get more aggressive when it comes to strategies like this?
See, with respect to strategies, the best part to scale it up is, obviously to use an hedge where, they usually use OTM hedge. That is what most of the expiry traders do. They use OTM hedge to, increase the number of lots that they wanted to trade, as long as they have the buffer capital to handle the maximum drawdowns. So what I would say is, suppose if your maximum drawdown is 10,000, then assume that your the future maximum drawdown is going to be 3 times of that, 30,000. So when you're trying to calculate what is the capital required, keep that in mind, so that even if because obviously the maximum drawdown is always in the future. So accordingly, when you try to calculate your money management rules, okay, 30,000 is the drawdown that is required and 50,000 is the margin that is required. So 50 plus 80, so 80,000 per lot is the margin requirement. So accordingly, when you increase or decrease, you can do multiple position sizing rules based on this. So give too much importance to what is the maximum drawdown, multiply that at least for 3 times, and then calculate your overall required margin. So that would be a better way to do all the money management part.
Okay, interesting. And very curious. Does the same strategy work when it comes to Nifty and Bank Nifty? I'm guessing the range will be higher. So does it still work there, or how do you track Nifty and Bank Nifty when it comes to something like this?
Yeah, it works. Still, it works. We run a bot called 1% Bank Nifty straddle, where that also is totally like similar to this strategy, where as long as Bank Nifty is trading between this 1% range, it tends to give you good returns. So you can do multiple variations, like what happens if in case you change from 1% to 0.5% or 0.6%. So those things you can play around with it, or instead of squaring of both the legs, what if in case I square of only one leg? So those are the things, multiple parameters you can change it. But since multiple expiry is going to come from Monday to Friday, the expected movement on expiry day is going to be muted. So when you are trying to create a strategy for range bound days, possibility of survival is much higher.
Interesting. And guys, if you'd like this strategy, please put your comments here, and also anything that you'd like to ask Kiru, put it here and we'll ensure that we have an answer from him. Kiru, let's go to the next part and the last part of this interview, which happens to be a rapid fire round. I'm going to ask you some questions, and whatever comes off your mind, please give me the answers, okay? So first one, which is the best trading book that you have read?
See, with respect to, I wouldn't say it is a trading book, but definitely people who are into this field of investing or trading, I would highly recommend to read The Psychology of Money. So that book, even though in spite of being in the markets for 14 years, there are certain assumptions that I used to have. Those things completely changed. The whole perspective towards investing totally changed after reading the book of The Psychology of Money. So I would highly recommend you to read that book. Any trader or investor, definitely that book is a must.
It's an amazing book. I've read it myself, Kiru. On that note, Kiru, why don't you ask our audience a question, and the first 3 people to give the right answer along with the hashtag never trade alone, we will give them this book. So Kiru, a question from you for the audience.
So see, Sensex is there for a prolonged period of time, right? So 30-40 years it's been there, and I want you to find out what were the list of companies which were part of Sensex when Sensex was started. How many, 30 companies were there, right?
Yes.
So out of that 30 companies, how many companies are still part of Sensex? You do this exercise and find out, and just let us know. The right one who answers the right questions
will get the book. Awesome. So all you have to do is tell us, when Sensex started to today, how many companies still exist? So from the first year when it started, the base year was 78, 79, started in 83. From the first year when it started till now in 2023, as you see this video, which are the companies that still exist in the Sensex? And what do you get in return? A book, and an amazing book to read, Psychology of Money. Also, don't forget, put a hashtag never trade alone. Kiru, the next question for you. Tell us, besides stock markets and trading, what is the one passion that you have?
I would say it's movies. I love watching movies. I've been watching movies at the age of 3. So I would have watched, I don't even remember the number of counts of watching movies. So it's kind of an art form that I truly appreciate. Most of the time that I spent outside of trading hours, or when I'm not totally into trading, I'll be busy watching movies.
Yeah, in market hours, the bots are making money from you and Kiru's watching his movies. Awesome. Tell me 3 of your best movies.
I like Ford vs Ferrari.
Okay.
And I like Rush. There is a movie from Ben Affleck, I think. Its movie name is Argo. So these 3 movies I really love.
How do you kind of take home the pain of having a drawdown that day?
See, one thing is, when you are facing a drawdown, the best drawdown detector is your wife. Yeah. She can clearly tell you whether you are making profit today or making no loss. Yeah. By seeing your face itself, she can tell you.
Yeah. She's the verified PNL for us.
Yes, but if I'm in a drawdown, you have to live with it. You can't avoid it. So all you have to do is I just go to a bar, or just have to sleep, get over it, and get back to trading next day.
Awesome. So the next time I see you at a bar, I have to assume that it was a drawdown that brought you there. Nice one. And tell me, Kiru, the last question for you is, the one advice that you would give a fellow trader?
I would say never ever fear to blow up your account. It's okay to blow up your account, and don't get into this analysis paralysis where if you keep analyzing and if you keep waiting for the right time to acquire all the knowledge, it will be too late. Whatever you know, with whatever the capital that you have, get started with trading. The more you do live trading, the more you learn. So stop doing so much of analysis, start doing with whatever things that you already know, and then learn by yourself.
Yeah, I think that's the best advice you can get. So the one advice that I've never heard before, but Kiru's given it today, is don't worry about blowing up your account. I felt really bad when I did it, but I'm very happy that someone's there to say that don't worry, there's always a second chance. And we all are living our second innings in the market, right? And very important, Kiru's also there on our platform, and he shares amazing strategies, like the one he shared on this video. So feel free to go onto our platform, subscribe to the strategies, and ensure you give your love to us on YouTube. On that note, Kiru, thank you so much for this interview. It's been amazing as always. Looking forward to learning more from you.